All right. Good morning, everybody. It is 9 o'clock, so I think we'll get started. I am very happy to welcome you this morning. As you know, the center has been we've been working on bringing you workshops that actually strengthen your business acumen and in all the areas that you need as you are the owner and CEO of your company and you strategically plan for its growth. We are starting we just finished a series on legal know-how, legal intelligence for businesses. And today we're doing access to capital. We're very happy to welcome Robert Guzman to talk all about access to capital and what small businesses need to know to have better success at accessing capital when they need it. So welcome, Robert Guzman from Bank of America. Thank you for hosting this workshop, for presenting this workshop. And thank you to everyone who are in attendance today. So let's get started. Robert, the floor is
Absolutely.
yours.
Absolutely. Thank you, Alika. I appreciate that. The warm introduction. So good morning, everyone. I hope everyone's doing well this fantastic Thursday morning. As Alika mentioned, my name is Robert Guzman. I'm a senior business banker here at Bank of America. I've been doing business banking for a little over 10 years and have been fortunate enough to be in the banking industry for over 18 years now. And over those years, I've had the privilege of working closely with businesses of all sizes and industries, really helping business owners navigate through financial challenges, optimizing their operations, and achieve responsible growth. I understand that the financial landscape at this time can be a little complex. So when Alika and the team were discussing how we could best support business owners in the community, our primary objective was to provide everyone with the most critical information that would be of the greatest impact to business owners, and ensure we provided everyone with additional resources and knowledge to continue to be successful as business owners. So when we had time to meet collectively, we created a two-part workshop starting today that will be focused on the smartest path to achieve long-term growth for your business. Today is the first workshop, and it's, like Alika had mentioned, it's going to be reviewing access to capital. And the second workshop that we're going to be discussing is how to effectively grow your business. And today's discussion, we're going to start by reviewing the many options available to business owners to obtain capital, as well as provide some clarity, additional insights, and solutions that are tailored to your specific needs. So with that being said, let's see. Yep, slide two. Okay. As business owners, there's several lending options available to help you accomplish your business needs. In order to best determine what's most appropriate for you and your business, it's imperative that you understand the benefits of each of these products, as well as key factors to consider when making those decisions. When you're applying for a business loan, there's certain considerations that lenders are going to be looking at while they're making your decision to approve your loan request. So after we review what the lending options are available to you as business owners, we're going to be discussing some key deciding factors that lenders usually look for when decisioning loans. If you want to go to the next slide, Lika. Yeah, so like I had mentioned, there's several different options available to business owners when it comes to business lending. Some of the most common lending options available to business owners are listed here. And these lending opportunities really help improve overall cash flow and really achieve your business priorities to ensure your business is successful. So what we're going to be reviewing today are business credit cards, lines of credits, term loans, equipment leases, commercial real estate, business auto loans, and SBA loans. And today's workshop, we're going to review each of these products, the benefits of each of these, and some things to consider or be aware of in order to make the most and best informed decisions for you and your business. So the first product I wanted to review are business credit cards. If you want to go to the next, there you go. Yeah. So having a business credit card is really crucial for business owners for a lot of different reasons. Business credit cards are a very powerful financial tool that really supports the growth, the management, and the sustainability of a business by providing flexibility, building business credit, and offering valuable rewards and account protections. So as you can see on the slide, there's several benefits to having business credit cards. The first thing is many business credit cards come with tools and tracking and categorize your expenses. So what this is going to do for you as a business owner is make it really easy to monitor spending, really manage your budget, and prepare your financial statements. So your CPAs are going to love you with that. I also wanted to share that having business credit cards provide immediate access to funds in case of emergencies or unexpected expenses, which can be a lifeline for maintaining operations during challenging times. And in most instances, when you use business credit card for purchases, lenders may allow 30 days before interest starts being assessed. So this can be a substantial savings and allows you to maximize your cash flow. This allows businesses to really cover expenses during slow periods or invest in growth opportunities without immediately tapping into your cash reserves. Another advantage of having a business credit card is you can issue cards to employees with customizable spending limits. And this is going to help you control your business expenses, and it really provides transparency into how your employees are spending and what they're spending it on. So you can ensure you're really monitoring and managing your budget more effectively. And sometimes we forget, but business credit cards often have reward programs such as cash back, travel points, or discounts on business-related purchases. And these benefits can really add value and reduce the overall cost for businesses. In some instances, some of my clients earn so many reward points, they're able to fund holiday parties or add additional incentives to employees to help with productivity. So securing loans, receiving better financing terms, as well as leveraging other financial opportunities in the future is really key when looking at business credit card opportunities. But one thing that I wanted everyone to keep in mind is usually with business credit cards, there's a low introductory rate that's given at time of application, usually for a certain amount of time, 7 months, 8 months, sometimes a year, 12 months with no interest. And what that does, it just really allows you as a business owner the opportunity not to have to pay the card off in full at the end of each billing cycle. But I want to caution everyone to be aware of when this introductory rate expires, because if you do have a balance on business credit cards and the introductory rate has expired, on business credit cards, interest rates can be a little higher than on most other types of business loans. In some instances, business credit card interest rates can reach up to 25% as the annual percentage rate. So when looking at long-term borrowing needs, the credit card isn't the ideal product, but for short-term borrowing, a business credit card will definitely help you accomplish those short-term lending needs. So now let's take a look at the next product, and that's business lines of credits. Now, with business lines of credits, what that's going to do for you differently than the business credit cards, it provides really some flexibility. It helps support any growth with the business. It really enhances your cash flow management and offers a safety net in case there are any unexpected expenses or your accounts receivables are lagging. Business lines of credits will definitely help support those areas of opportunity as a business owner. Now, having a line of credit is really a proactive way to ensure you have the working capital you need to manage seasonal fluctuations with lower interest rates than business credit cards. One thing I want everyone to be aware of is some of the impacts a line of credit may have for you as a business owner is usually to have this particular product. There's usually an annual fee that's assessed to the line of credit, even if you don't use it. So just to have a line of credit for your business, annual fees can be usually 0.5% of the line amount or a fixed set fee, just to have this product as a business owner. Another thing I want everyone to be aware of is that on this particular product, business lines of credits, the interest rates are variable. So, and they're usually tied in to the prime rate. So if the prime rate goes up, your interest rate's also going to go up. So a lot of business owners may be a little hesitant because of that variability with the interest rates. And what lenders do in regards to a lines of credit is they usually ask for financials annually, just to ensure that the business can continue to support the line of credit and there's no issues with the business and the operating day-to-day managing of the business relationship. So that can be a little bit cumbersome for some clients because on an annual basis, lenders do ask for, they can ask for a full financial package, and I'll go over that later. But they usually do want to see some type of financials that show that the lender is still comfortable having this open line of credit for business owners. Another option when we're looking at types of products available to business owners are term loans. And there you go. What term loans can do for you as a business owner is really provide a solution when you're looking for fixed rates. You're looking for predictable payment schedules. Term loans can really be used to help you accomplish that. And the products available, or what you can do with a term loan, is you can purchase fixed assets such as equipment, machinery, commercial real estate. You can leverage a term loan to expand your business by using the capital to increase your advertising budget, your marketing budget, hiring additional employees. You can also use term loans as working capital to really support the business growth, to help with that business expansion. Term loans can also be used to refinance any existing business debt. So maybe you're getting out of a variable rate loan into a fixed rate loan. This will help maximize your cash flow, help you save money, and it may, in some instances, decrease the term and put you in a more favorable situation that some of you may or may not be in. Some of the things I want to highlight when you're really start delving into term loans is before you decide if this is the best option or if this is something that you want to do, some things that the bank will do, our lenders will do, is for this particular product, there's usually some type of closing costs involved just to complete the loan. You'll also have origination fees. So just to start the application and get the ball rolling, lenders will charge this origination fee when you're seeking term loan financing. So just be aware and review any and all fees associated with the loan prior to making any decisions, because the fees can be pretty hefty at times. Now, in some cases, when you're looking to stay ahead of technology, lower your maintenance costs, and have the ability to upgrade equipment anytime you feel necessary, one of the products available is equipment leasing. So leasing business equipment can be very strategic decision for many businesses, providing the flexibility to really reduce the burden and maintenance of any upgrades, as well as provide some tax advantages on the equipment that is being leased instead of purchased. What equipment leasing does is really provides some valuable advantages that may not be achieved by purchasing the equipment. So one of the first things is leasing equipment really allows the business to acquire equipment they need without a large upfront capital outlay. So this really helps preserve your cash flow for other critical expenses, such as operating expenses, any marketing expenses, or inventory that may be needed. And in addition to conserving cash flow, lease payments are often considered an operating expense. So what that means is you can deduct that from taxable income. That potentially reduces the overall tax burden to you as a business owner. And this can be more advantageous compared to the depreciation on purchased equipment. So the difference there. So really big tax benefit with leasing instead of purchasing. And for business owners that are in need of the latest technology and the newest pieces of equipment, we're all aware how quickly things change and items can be outdated, equipment can be outdated, technology changes every single day. What a lease does, it really enables businesses to upgrade to the latest models of equipment, the latest technology available. And at the end of the lease, it just really ensures that you as a business owner really remain competitive without being confined or stuck with any outdated equipment that isn't needed anymore. And this equipment leasing is really good for industries where technology is a key focus. What the lease does, it really just mitigates that risk of having the outdated technology to stay on top of your business. And businesses, what they can do is regularly update equipment without any financial loss associated with selling outdated equipment. So you don't have to go to market and sell any piece of equipment before buying another one. When the lease is up, you usually have the option to purchase that if you like. But with most instances, business owners just continue to lease another piece of equipment or advanced technologies. So they're always having the latest. Okay. And then purchasing commercial real estate can really be a significant investment for business owners. Not only it provides steady flow of potential income, it also acts as a hedge against inflation. So on the next slide, commercial real estate loans, what they do for business owners is they really provide tax advantages, such as the ability to deduct the mortgage interest, the property taxes and depreciation on the property. And these deductions can be significantly reduce the business's overall tax burden, really helping the business as far as their bottom line goes. And with each mortgage payment made towards the purchase of any commercial real estate, it will build equity in the property. And over time, what that equity is going to do or can do, you can leverage that for additional financing or serve as any retirement asset. Another highlight of having commercial real estate is that it often appreciates in value over time. So what that does is really provides business owners with a valuable asset. The appreciation could lead to really substantial financial gains if the property is ever sold in the future. And the purchase property really has, if it does have additional space, it has more space than what the business actually needs. You can also lease out extra space to other tenants. And what that's going to do or provide to you as a business owner is provide rental income that can really offset mortgage payments and generate even more profit or income to your business. And lastly, what a commercial real estate loan can really do for you as a business owner, it can serve as a long-term investment play. So what I mean by that, it just really provides the business owner with tangible asset that can be sold. You can lease the commercial real estate or pass down to future generations to continue to earn rental income and also provide a steady source of funds for generations to come. And in summary, the purchasing of commercial real estate really offers a couple of benefits that I wanted to really highlight. So business owners' long-term financial benefits, as you can see, is very substantial. You really have control over the property, so you're not subject to landlord requirements, rents going up, and not really having a say on what that would look like. You control and you know what the mortgage payments are going to be on that property, so you can budget accordingly. And the potential income generation growth and tax advantages are very substantial. So this is one of our most popular loans that we do here is commercial real estate, just because of all the advantages that it gives to business owners. One other product that sometimes some of us forget are business auto loans. Now, business auto loans are very, very important, because what they do is they really provide tax advantages as well. And they also ensure businesses have flexibility financing terms and competitive pricing, while at the same time provides really fast, it's a really easy application process as compared to some of the other lending products, with the fast approval time and really minimal financial documents are required when a business auto loan is being purchased. So that's something that a lot of business owners sometimes forget. They just go to the dealership and they want that car and they finance that vehicle without really understanding all of the benefits available if they were to finance the car under the business name. So the last lending option that I really wanted to highlight and go over is small business administration loans, otherwise known as SBA loans. I'm sure everyone has heard of those or read up on them. And what SBA loans are they're partially guaranteed by the government. So lenders really like these types of loans because it reduces the lender's risk, because it encourages lenders to offer more favorable terms and approve loans for businesses that might not otherwise be considered because they're too risky, or they're not quite in the realm of what lenders are comfortable with. So by having an SBA loan, we're able to help business owners where in the conventional lending side, sometimes we're not able to help just because of the some of the terms and conditions may not fit on the conventional side. And since the loans are backed partially by the government, the bank isn't taking 100% liability for the loan. So if the loan does default, they're not on the hook for 100% of that loss. So lenders really highlight and take advantage of SBA lending at most opportune moments, just because it's very favorable to lenders because they're not taking 100% of the risk. And SBA loans, one of the huge benefits of doing one of these loans is they have really lower interest rates than conventional lending. So it just makes this particular loan more affordable to business owners over the long term. So lower interest rates, longer terms equals a less payment. And what that really does is really add more cash to your reserves. So your cash flow management increases substantially. Another advantage of SBA loans is the extended payment terms. So with SBA, the range can go anywhere from 7 years to 25 years amortized. It just depends on what type of loan it is, and what product or what you need the SBA loan for, that's going to determine the length or the term of the SBA loan. Usually 25 years is commercial real estate. 7 years is usually something like equipment, small expansions or business expansions for working capital or additional capital to help and assist with marketing or advertising or hiring new employees. So this really helps when you're looking for improving cash flow as a business owner. In addition to SBA loans generally require lower down payments than traditional loans. And most instances, when you're looking at commercial real estate through an SBA loan, usually it's a 10% down payment. So you're able to retain more of your cash to use however you see fit. And conventional lending, normal is about 20% down. So as you can see, there's a huge savings, double as far as the cash that you're able to keep by going through and leveraging the SBA to do commercial real estate. And another thing I wanted to highlight is it's usually easier when you're applying for SBA loans as far as the qualification requirements, because SBA loans, they're just more accessible for a lot of businesses that may not qualify for conventional lending. So the qualifiers may be easier than the normal conventional route, because like I had mentioned earlier, a portion of that loan is usually secured and backed by the government. So the bank isn't, or the lender isn't 100% on the hook for any loan amount that may go into default. Now with SBA loans, there's several different programs available, and they're really tailored to your specific business needs, such as microloans for very small businesses. There's 7A loans for general purposes. There's SBA 504 loans for really used for real estate and larger equipment purchases. And the advantages that I mentioned earlier really make SBA loans a more attractive financing options for business owners really seeking capital to start a business, to grow their business, and really maintain operations to ensure your continued success. And some of the purposes or what SBA loans can be used for is you can use an SBA loan to purchase or refinance commercial real estate. You can use it to fund any construction, so any ground up construction where there's land and you're trying to build a building or build your business on there. You can do that. You can leverage it to improve the quality of the property you may have, whether it's leased or owned. You can do tenant improvements to help you upgrade anything that may need upgrades to ensure your cosmetic curb appeal is up to date. It also provides, you can use an SBA loan to provide you additional working capital to help with any growth or expansion of your business. And SBA loans can be used for business acquisitions. So if you're a business owner and you're an accountant and you're trying to buy another accounting firm, you can use an SBA loan to acquire that business as long as it's in the same industry. And another function of an SBA loan is you can use it for partner buyouts. So if your partner in a business wants to retire or do something different and you want to leverage the SBA to finance and buy that partner out, the SBA can help you accomplish that partner buyout without you having to go to your cash reserves or your retirement accounts to buy out your partner. Again, you can use it for cosmetic tenant improvements, and you can also use it to purchase equipment and inventory as needed. Some things that I do want to highlight about the SBA loans is Some of the downfalls or areas of opportunity that we run across is clients often mention that sometimes the application process for an SBA loan can be a little bit lengthy. Since it is a government loan, the bank is involved, and there may be additional CDCs involved to help with financing. That's why the application process can be lengthy. So that's something to consider when you're really looking at SBA lending, because it can be a little bit time consuming and a little bit complex. So it's imperative that you work with business bankers, accountants, financial advisors to help you along with that process. And it often involves a lot of paperwork. Sometimes you may need business plans when it comes to startups. You're going to need your financial statements, personal financial statements, in most cases too, because the lender would want to see what the business looks like, as well as personal income that may be coming in. Collateral requirements on SBA loans is something that is sometimes looked at negatively, just because depending on the loan type, the size, the SBA may require the borrowers to pledge personal and business assets as collateral. So this can be a little risky, and some clients are a little bit uncomfortable, because if the business fails and the SBA and the bank may have the option, since you pledge your personal assets and business assets, to acquire or go after those to seek the repayment of the loan. Another thing is, on all SBA loans, there are personal guarantees that are required. So SBA loans require the business owner to provide a personal guarantee. So what that means is they're personally liable for the loan, but the business can't repay it. So this can put personal assets like homes or savings accounts at risk, because the lender has the option to retrieve those as a possible repayment if the loan does default. And SBA loans, the approval times are usually a little bit longer, just because, like I had mentioned, there's a few more kind of hands in the cookie jar. So the SBA itself is reviewing financials, loan documents, really reviewing the qualifiers. The lender themselves are also doing that, as well as any CDCs that are involved are also doing that. So normal processing times on conventional lending, 30 to 45 days. When you're looking at SBA lending, it's several weeks more, maybe even a month or two more to receive those fundings. Another thing to consider when looking at SBA lending is there's fees and costs associated with these SBA loans. So the fees will vary depending on what type of loan and the loan amount. There's usually an origination fee associated with it. The SBA has something called guarantee fees that they will charge clients when borrowing from the SBA. And there's also usually some type of closing costs involved when funding SBA lending. So these fees usually are rolled into the loan, but overall they still add an increased loan amount because you're financing those fees. There are some limitations on the use of funds. Although SBA loans can be used for a lot of different purposes, there's still some restrictions on what you can and cannot use an SBA loan for. You can't use it to refinance certain types of existing debt or to purchase any non-essential assets. And then loan size limits are also something to take into consideration, and this is what lenders look at. So the SBA sets maximum loans amounts for the different types of SBA loan programs. The limits are usually high, but nonetheless, there's still limits on some of the SBA loans. So if you're seeking financing that exceeds a limit, this probably won't be the best loan for you if you have a very large capital need. And so now that we talked about and reviewed the most common types of loans, the benefits of having those loans, and we also shared some things to consider before deciding what loans are truly best for you and your business. I want to talk about and discuss some of the most common reasons to seek a loan, what business owners usually look at or think about when looking to expand or grow or needing capital. Also want to go into the 5 C's of credits, what that is, what lenders really usually look for, and that you're aware of what the 5 C's are. So you have a really comprehensive plan if you're seeking lending or financing. Also going over some best practices when dealing with business credit. So you ensure you're maximizing that opportunity. Also ensure that you understand what you can do to help your business credit score. And also we'll go over what financial information lenders are going to require when you're ready to take that next step and apply for any type of business financing. So there's several different reasons why business owners really need and want to apply for a loan. But in order for us to really determine which loan best suits your individual needs, it's always wise to speak with individuals such as your CPA, your accountant, your attorneys, any financial advisors, any trusted business partners, and then also business bankers. So by doing that, you're really ensuring you receive and you're provided expert guidance. So what business bankers do and these trusted partners is they really provide experienced understanding and the nuances of each of one of these loans, all the products available to you as a business owner, how to navigate through the financial landscape out there, and then really create and provide expert advice really tailored to your specific business needs, really helping you choose the best product available to you and really structuring the loan that's going to make the most sense for you as far as the term of the loan, the product type itself, and how we're really leveraging all the options available to you. So when you work with these financial advisors and these trusted partners, you really understand all the loan options available to you. And what that's really going to do is just really help you ensure you receive the best rates, the best terms, and also increases your chances for approval. Because with all the loans available, all the different structures available, a business banker or these trusted financial partners really can explain and review all of the pros and cons that each option has. And what that does for you as a business owner, just really ensures that you select the appropriate loan that really aligns with your business goals and your particular financial situation to ensure you're always being put in the best place to ensure your success. Now, spending time with these experts also provides additional access to resources to support your business's broader financial health. So not only lending may be an option, but they can also look at providing you resources available to help you save money, save time, ensure your finances are in order. You're really taking advantage of everything you're entitled to with that particular bank. And you're really leveraging all options to ensure your financial stability as a business owner continues to accomplish what you're trying to accomplish. So very important that you really work with these experts to help you and guide you and navigate through these crazy times right now. And then when lenders are decisioning any loan request, there's a couple of factors that I really wanted to dive into and go into. Yeah, there you go. Yeah. So the 5 C's, I mentioned this earlier. This is something that the banks and lenders really take to heart. So it's not set in stone, it's not a science, but this is what they really review and go over. So the first C is capacity. So what that means to you as a business owner is this is your ability to repay the loan back. So what the lender is going to do is really review your business financials. In some cases, they're going to review your personal financials and determine if you qualify for a business loan. So primary source of repayment is the actual business revenue. Secondary source is any personal income or personal financials that would help assist in the decisioning of the loan. The next C of the 5 C's is capital. So what that means is really the liquidity or the cash that you have in your business accounts and in your personal accounts, because the more capital you have and can retain, the likelihood of receiving an approval is increased substantially because you have the liquidity or the cash on hand, the capital on hand to repay any business debt that you acquire. Next is collateral. So what collateral is just any tangible form of security that you could provide to support the loan request. So when you think of collateral, some of those things are equipment, commercial real estate, vehicles, savings accounts, cash, certificates of deposits. Those are the collateral types that lenders usually will require if collateral is something that is being financed, like the equipment or the real estate. Another thing that lenders will do is conditions. So what that means, the conditions is really the primary reason for the loan request. Why you as a business owner requesting this loan, and does it make sense for the request and the loan amount that you're applying for. So lenders really want to ensure that the loan will be used for its intended purposes, and the business is not in an industry that is questionable, or they don't feel comfortable with that specific industry. And lastly is character. So when you think of character, what that means is it just really deals with business owners' past and current obligations. So when you think of character, it's really how you managed your credit worthiness, how you manage your taxes. Are you on time with your tax payments? Are there any past due tax implications that you need to resolve before applying for a loan? What character also includes is if there's any type of felony convictions, they also take that into consideration when looking at lending request for you as a business owner. So these considerations, this is what lenders refer to as the 5 C's. This is what we really look at when decisioning a loan along with the business financials to get an approval. So when you think about business credit and how to ensure you maintain good business credit, the rule of thumb lenders usually use is this right here. It's called the 5-3-2 rule. So what that means is lenders like to see 5 active trade accounts. So out of those 5 active trade accounts, 3 can be business cards, and then 2, they want to see loans paid in full. They want to see that you have paid off any business debt in the past to show that your credit worthiness is appropriate to lend additional capital to going forward. So having all of these in line, what that really does is it substantially increases your chances of receiving business credit, having a higher business credit score, and ensures the accessibility to have access to capital if you need it in the future. So when we look at applying for a business loan, I want everyone to be aware and prepared what financial information the lender is going to be looking for to decision your loan request. If you want to go to the next slide, Lika. Yeah, there we go. So the requested financials may change based on the product type, the loan amount, and the business structure. But usually, these are the most prolific items that lenders will ask for. So the personal information that lenders want to see is usually personal financial statements. And what that usually does is really provide lenders insights to any personal assets and personal liabilities that they are reporting to lenders, so lenders can really decision and cash flow the deal to come up with debt ratios. So that's definitely something that lenders are going to require when you're looking for a business loan. And I know you're thinking business loan, why are they asking me for my personal information? Most lenders may have something called global cash flow. What that is it includes any business revenue minus business liabilities and personal revenue minus personal liabilities. And those calculations are referred to as a global debt coverage number. And that is a ratio that lenders use to approve loans. Another thing is tax returns. So what lenders will require are business and personal tax returns. And they may ask for up to 3 years on both. I know with SBA, that's definitely the case. Like I mentioned earlier, there's a little bit more paperwork, and that is one of the things SBA definitely asks for is 3 years minimum on the business side and 3 years personal tax returns. Another thing is we're usually asked for a business debt schedule. What that does is really provides the lender some clarity and some insight on what the business debt is, if there is any, what the monthly payments are, how much is owed, and who it's owed to. And then the lenders will definitely require collateral information if it is secured by collateral. So if it's a commercial real estate loan, definitely want to know information about the specific property. If it's secured with equipment, we'll need the VIN number. We'll need to know what type of equipment is, the life expectancy of that equipment to see how long we can create a term for that specific piece of equipment. So those are the checklists and items that usually the lenders will require to decision the loan. And like I had mentioned, there's different types, and there is going to be more extensive financials required depending on, again, the type of loan, the loan amount, and how the business is structured. So at this time, I just wanted to thank everybody for your time today. I'm truly thankful to be given the opportunity to share some insights on all of the lending products available to help the continued success of your business. And also really going over what lenders look for when decisioning these loans and the documents that lenders will require when you're ready to take that next step to apply for business financing or business lending. So at this time, Alika, I'll go ahead and turn it over to you for any closing comments, or if we have time for questions, definitely can take those on right now.
Sorry. Thank you so
You're
much,
fine.
Robert. That was very insightful, very in-depth. Thank you so much. I appreciate it. I'm
Thank
going to
you.
open it up for Q&A. We do have 10 minutes. So, Dr. Skaria, I think you have a question.
Yes, ma'am. Thank you so much, Alika. Beautiful. And thank you, Robert, such insightful presentation. I have one question. This
Sure.
relation to, now you talked about SBA loans and organization do not have the 3 years of experience. How do you get supported? We can give credentials in terms of your credit worthiness, etc. But business is not too old. So
yeah, and like I had mentioned, that's why it's important to have trusted advisors to work with you, because there's a lot of different options that may be available to you as a business owner. So a lot of the bigger banks usually require 2 years minimum in business. However, if you're in a specific industry, if you're a doctor, a dentist, a veterinarian, the 2-year minimum requirements are out the window. So some lenders have specific industries they really focus in on and make some exceptions to provide those industries the opportunity to receive lending without the minimum requirements, because it's very advantageous for the bank on those specific industries that I mentioned earlier. If that's not the case and you're not one of those specific industries and you still want to seek financing and you're less than 2 years, I'm also at Bank of America, I'm the CDFI ambassador. What that is there's community development financial institutions. Those are nonprofit organizations that have grants and capital available to business owners that don't fit in traditional banking boxes. So less than 2 years are an industry that the bank may not feel comfortable lending to. These CDFIs can step in and help those business owners become bankable. And once they do increase revenue or do continue their success and start fitting in that traditional banking wheelhouse, at that point, we transition to the business banking lending side, because rates are usually more favorable, terms are usually more favorable, there's more options available to you. So there's a lot of resources available to business owners, and sometimes business owners are too focused on running their business. They don't take time to say, okay, let me talk to somebody and see how these experts can help me, because there's a plethora of opportunities and resources that are available free at no cost. And it just takes a little time, a little vulnerability to ask for help. And that's what we can do to help business owners in that predicament.
Thank you. That's a good answer. And Robert, how do you work with it? Work with you through Alika, or how does it work?
Did you want to provide my contact information?
Yes,
Alika?
yes, I can do that.
Okay.
Yes,
Okay.
yes. I can introduce the two of you and then you can start the conversation. Yeah.
And you can also, if you want,
Via
just
email,
send my contact information via email. If anyone has questions that you may not feel comfortable asking here, or you want to connect later, just feel free to
You could
reach
also
out.
put your chat email in the chat if you'd like, Robert.
Well, remember, I'm not an expert in Zoom.
Okay, let me see.
Maybe, ma'am, I'll take your help. You drop a note with a copy and pick it up.
Okay.
Alika, I'll take that, okay?
Okay.
It also know where the source came from, Robert, be easier. You don't go to the spam otherwise.
Uh-oh. We don't want that. No spam.
Okay.
Any other questions out there?
I've just put the email in the chat
Mhm.
so people can reach out to you. Okay, doesn't look like anybody wants to ask right now.
Okay.
So, but I will send the attendees your contact information so that they have it and they can reach out to you whenever they'd like.
Perfect. And then one thing I just wanted to remind everyone, there's a second workshop next Thursday.
Yes.
And yeah, we're going to be going over how to effectively grow your business to ensure sustainable growth.
Yes, and we hope you'll join because that is meant specifically for companies who are preparing for growth.